The beginner's smart money moves in 2025. Imagine sleeping whilst your money works for you. It's a popular saying, but is it within reach? If you haven't tried it, then you cannot erase its existence. There may be countless financial scenarios you might have considered in the past: credit, real estates, mortgages, stocks, gold, crypto, bonds, or options, but there is another option often overlooked yet creating huge alpha for investors. Before we jump in, please remember I am not a financial advisor. I am only sharing ways and strategies which have tested and worked for me over many years. Please do your own diligence before making your investment. Stick around because we are going to share 5 typical ways for reaching this investment goal. What is the secret amount to an ideal investment in dividend ETF? This certainly depends on your lifestyle and needs. As little as $50 will get you started. No cold calling or complex learning curve, just an investment trading platform would be necessary. You can adjust your investment based on your specific needs or aspiration. Picture this: a lifestyle where your investment generates a consistent stream of income straight into your bank account without touching the principal, allowing you to realize the financial goals you always dream of. Keeping things simple is generally the way forward. Our current economies are yet a reminder that a common investor can avoid the narrower, volatile and risky investing strategies that are harder to handle, allowing you less worry during times of turmoil as your core holdings are locked in a fund. A passive dividend ETF investor is generally better to capture a higher proportion of total returns than the individual stocks can generate over time. The added benefit of low-risk investment strategy makes it all the better. Dividend ETF opts for steady income dividends all-in-one stocks-like allocation funds that automate certain investments tasks. In this video, we will show you how to hit the results of $100 invested over the 5 years period. Before that, let's consider what passive managed dividend index or dividend ETFs is and how it works. What is passive managed dividend index or dividend ETF investments? Passive managed investments tracks a specific stock market index. It's most common on the regulated market and it simply replicates the composition of an index. There are 2 main types of passively managed investments: open-ended investment, OEIC, and closed-ended investments, CET. Examples of open-ended investment includes the mutual funds or ETFs, and examples of the closed-ended investments included the 401k or in the UK the investments trusts. Dividend index or dividend ETF investments are one of the many passive managed investments in the world. How it works: a fund manager may allocate their investments in a group of stocks that pay dividend to investors based on divided ETF, allowing investors to receive dividends if the stocks companies they have invested in the index or ETF pay them. Whichever option that may suit you, you may be able to choose income made directly or reinvestment in the fund you have invested. Payment is made proportionate to the number of shares each investor holds. Companies publish publicly in the fund prospectus the annual dividend payout and proportionate dividend per a share. The ETF sponsor will set out the dividend date and the dividend payment date. Take a look at the snapshot below, which captures the return on investment of $100 in 5 low-risk dividend ETFs and 3 low-risk dividend index over the last 5 years. Watch out for my next video on how to open a beginner's trading platform account.